Hi, this is Dr. Raghu Anand. I'm an associate professor with Jain University and I head the value addition of the dual department at Center for Management Studies, Bangalore. In this video, I'm going to take you through the branches of accounting. Now that assuming that we already have understood basically what is accounting, etc. So let's try to understand the branches of accounting. Now basically all of us know that accounting is the art of recording all the business transactions. So the moment there is a monetary aspect involved in a business transaction, we start recording it. So as and when the transaction takes place, we record it. That is what is called as an accounting. And the moment you say accounting branches, we talk about three things. There are three branches in accounting. One is financial accounting, then cost accounting, then management accounting. Though of late people talk about different other forms of accounting, like auditing is also categorized as an accounting, or accounting for trusts and other things, which is called the fiduciary accounting and all that. But I'm trying to take you through an academic orientation. I'm trying to take you through the traditional concept of accounting. So the moment I say branch, as I said, we can categorize them into three. One is financial accounting, the second is cost accounting, and lastly, the management accounting. Now, financial accounting gives us an overall picture of the organization. Now, what does it do? As and when the transactions are taking place, we record everything, and ultimately every accounting system will have a double objective. Now, what is the double objective? That we would like to know what are the profits and what is the loss. We also would like to know how much are the assets and how much are the liabilities in the business. We all strive to understand a couple of things in accounting: profitability, liquidity, and solvency. So your financial accounting is just going to give you the overall picture of the organization, like the profits, losses, assets, liabilities, etc. I have mentioned a term here called YOY. This is called year on year. So with help of financial accounting, I can also compare. Like for example, I have this year's purchases or sales. I'll compare this year's purchases and sales with the last year's purchases and sales, or this quarter purchases and sales with the previous quarter purchases and sales, etc. So this is what is financial accounting is all about. And financial accounting is basically historic in nature. What is meant by historic in nature? Financial accounting is something which is going to record the transaction as and when it happens. Transaction first. Transaction takes place. The moment transaction has taken place, then you're going to record it in your books of accounts. So that is basically the financial accounting. For example, the financial accounting, if you look at a company like, say for example, Honda Motor Scooters Limited, HMSL. Suppose there's a statement which you see in the paper or in the television or somewhere, which says that X amount of profit they have made in the first quarter. So they are not going to talk about the individual products of this Honda. They may have products like Activa, Dio, and so many other things. They don't. They just talk about the overall company's performance. They say the entire company has made this kind of a profit for a particular given period of time. Then we move on to something called cost accounting. Now, cost accounting also gives us certain information, but most importantly, it gives us the product-wise details. The cost details will be given to us. If you take that same Honda Motor Scooters Limited example, financial accounting, what did it do? Financial accounting just gave us the entire picture of the organization. But in cost accounting, I can get the details of the product. For example, I can get to know how is a brand like Activa performing, or brand XYZ, whatever. So I can get to know about the entire detailing of the brand. And while calculating the details of the brand, these are all the things that I get to know. I get to understand what is called as a prime cost. That is the materials and the labor put together. Then certain other expenses relating to it. And what is the total cost? What is the profit? So the entire detailing of all the products that we are dealing in, I can get it from cost accounting. We all should keep one thing in mind, that if you are running an organization, say for example you have a manufacturing unit, then in that case you need to compulsorily maintain a financial accounting system. You also must compulsorily maintain something called as a cost accounting system, provided you're in the manufacturing sector. All right. So first is financial accounting, that gave us the overall picture of the organization. Then comes cost accounting. Cost accounting gives us the product-wise cost details. And lastly, we move towards a very important branch of accounting which is called the management accounting. Now I just told you one thing. Financial and cost accounting is compulsory, but management accounting is actually optional. Now though this is optional, still everybody would like to have a proper management accounting system in place. Now why is this? What does management accounting do? Management accounting provides the required information for the higher level management who are involved in something what is called as the decision making. Now let's say, for example, what do? They simplify a couple of things. For example, financial accounting prepares something called as the financial statements. The moment you prepare the financial statement, management accountant prepares something what is called as a ratio. So under management accounting, we can understand there will be a lot of analysis that goes on. So you prepare ratios and you're going to put it across to the management so that for the management it becomes very simple. I'll give you an example. Now let us say you have assets worth crores of rupees, liabilities worth lakhs of rupees, etc. Now if I make an asset and liability ratio and say something like 3:1. Now what do I mean by that? For every 3 rupees of asset, I have 1 rupee of liability. So my organization is doing pretty good. Now on the other hand, if supposing it is 3:4, for every 3 rupee of asset, my liabilities are 4 rupees, the organization is in danger, right? So what does a management accountant do? He will supply information for decision making. He calculates the ratios, and also there's something called cash flow which will be subsequently explained in the next couple of videos. And then they prepare something called trend analysis, like say for example sales trend. Now how has the trend been over a period of time? What is it going to be in the future for a next short period of time, etc. Management accountant will also help the organization in a decision which is called make or buy. Today everybody talks about make or buy decision. Making is always may not be a very positive, profitable perspective. Sometimes buying. Now say for example, you look at the ceramic market in India. Now most people would not want to manufacture anything, electrical appliances, they wouldn't want to manufacture anything, they would want to buy. Maybe they'll tailor make, they'll buy it from the factory of the world. I'm sure China is called the factory of the world. So they buy it from there, they just brand it in India and they start selling it. So making is better or buying is better, okay? And then whether to continue or discontinue a product. You have a product which is already in force, maybe the sales are low, you're not able to sell it as much as the other products and the competing products. So whether you should maintain that product or whether you should discontinue the product is another very important question. So the decisions in any organization is taken by the top level management. And management accountant or management accounting is a stream that supplies all the information towards decision making. So just to sum up quickly, financial accounting gives you the entire organization, overall picture of the organization, and financial accounting is historic in nature. What is meant by historic in nature? The activity has taken place, I record it in financial accounting. In between financial and management accounting comes a very important level which is called cost accounting. What does cost accounting do? It gives us the product-wise cost details and information. And lastly, we have management accounting. As I already said, management accounting provides information for decision making. It's very futuristic in nature. And it does a lot of things, what we can sum up in one word and call it as analysis. So whatever is prepared by financial accounting and cost accounting, it will be entirely summed up by management accounting through something what is called analysis. And this information is passed on for decision making. Now, as I said, currently we talk about auditing as a branch of accounting or accounting for trusts and things like that. But then primarily to look at it, we just have 3 branches of accounting which are financial accounting, cost accounting and management accounting.